Hello and welcome to a brand new show of Market Makers. We are calling this series of Market Makers as the Big Reset. Well, indeed, it's been a big reset at the government level, at the mood level, but for earnings and for consumer behavior, is this a big reset? Stock markets, well, they always say that don't focus on where the puck has moved, but focus on where the puck will move. Whereas the consumer is feeling the heat of slowdown, in stock markets, consumer stocks are not feeling the heat of the slowdown. So today I have with me someone who I have interacted with more than 20 years now. That's 2 decades. And I've always admired his ability to pick up simple consumer business which are based on one theory that India will grow and India will consume more. But is India consuming less in this slowdown? And is the current downturn in consumerism a godsend opportunity for long-term investors to buy some good quality blue chip stocks? Milind Karmarkar of Dalal and Broacha joins us. Fantastic to have you back. You know, I always look forward for this annual interaction we have, even though our viewers say that I should call you more often.
No, the issue is that what else can I add? Every time it's the same. So that is the reason why I said that let there be enough gap between our interactions.
Okay. You champion buying into consumer stocks, and you believe in just one simple theory: India will grow, correct, we will consume more, and we will consume better. Correct. But the data, which is consumer FMCG sales, auto sales, multiplex footfalls, mall footfalls, all of them are saying that consumerism has taken a backseat. There is a slowdown. How would you defend your hypothesis?
Okay. So let me go back. Okay. So if you say that because ultimately when a consumer wants to buy or doesn't want to buy, it frankly depends on the animal spirits, as they call it. So let's go back 20 years and 2000, 2001, the headlines, okay, GDP is slowing down anywhere around 3.8 to 4.8%. Bank NPAs at more than 10%. We had car sales, passenger car sales coming down by 40%. We have M&HCV falling by 25%. There were a lot of companies which were declaring lockups. There was significant amount of downsizing. And same thing is happening now. And then between 2001 to 2008, in 6-7 years, market went up 6 times and there was extreme euphoria. So I think it's never different. It's always the same.
Always the same.
It's always the same.
Let's turn to this screen, and we've got 3 big questions for you, and we'll try and address those questions one by one. They'll just pop up in a second now.
Okay.
Is the consumer demand sustainable when job creation is not happening?
Okay. So I would say excellent question, because I also keep thinking about it. So one has to look at, is the environment changing? So yes, the government has put in its effort to change the environment by reducing taxes on manufacturing. That's the first step according to me. And this will definitely push manufacturing. If you see Mr. Modi's address on the 15th of August, he talked about tourism. I think that's a huge, it can be a huge a huge space where a lot of employment can be generated.
Globally has shut down, Cox and King in India has shut down. Where is a bubble there? I mean, where there's a boom?
So that's the thing, right? So this is the time to invest. This is not the time to say that, okay, I will also shut down. This is the time where you put in more money. So again, going back to 2000, most of the engineering companies had significantly, downsized themselves. And between 2002 to 2008, we had Voltas going up 40 times. We have Alfa Laval going up 60 times. So that is the case. You need to restructure as of now and then move up. So that is what will happen. I'm sure jobs will be created. Coming back to the demand in consumers, it's all about increasing per capita income. So between 2010 and 2019, our per capita income has gone up roughly 2 times, from $1,000 to about $2,000. If you go to see anecdotal evidence, if you see Malaysia, Singapore, Thailand, even Japan, Mexico as well, one sees that once the $2,000 limit is crossed, within 7 to 12 years, the per capita income goes up more than 3 times. So if that is going to happen in India, why worry?
Okay, my second question to you, and which again is the obvious question, which is, there have been instances in the past where consumer demand has slowed down. and the skeptics and naysayers have been proven wrong.
Passenger vehicles is a classic example. In 2000, I don't remember the exact time, it may be 98, 99 or 99, 2000. But the passenger vehicle, demand or growth had degrown. It had degrown by 40%. And after that, if you see, there has been a consistent growth in passenger vehicles. So I'm not saying passenger vehicles could be but there could be a lot of other things. Like if you see electricity reaching every home, so that's a big opportunity, because if you go back and see in the United States, around 1946, the electricity penetration was about 47%. It went by 1970, it went up to 100%. The AC sales in US went up from 45,000 per year to 2 million per year. In India, in rural India, you may not find refrigerators and ACs. AC sale typically, it has gone down significantly. But the opportunity is massive. So that will continue to grow. So it has happened in the past, it will happen again. Okay. So no
Let's
issue.
address the third question now,
Yeah.
which is, these are some of the P multiples right now, but the third question which we want to address is, high P multiples, are they capturing the secular growth which you're pointing to? So let's look at the high P multiples. Here again, we are looking at just 1 year forward data.
Yeah.
Like they say on Wall Street, that price is what you get, value is what you pay.
Yeah.
Investing is not about buying gold at the price of diamond, it is buying gold at the price of silver.
Absolutely.
These are great companies, but are they outpriced?
So if you see in history, these companies have done very well. So typically, if you believe that India will grow at, let's say, a compounded growth of 8%, add 4% inflation, so 12% nominal growth over a longer period of time, these companies can definitely grow at about 50% higher than
The
that.
graphic is right. Britannia 50 times, Colgate 44 times, Imami 25 times, Godrej Consumer 38 times.
Yeah.
Can you actually make money if you buy the stocks at these P multiples?
So I won't go company specific, but I'll tell you the reason that if a company can grow at about 18% top line, it can comfortably grow by 50% more its bottom line. So bottom line can grow at 27%. So if that happens every 2.5 years, its profits will double. So at the most what will happen, a 50 P today in 2.5 years will become 25 P, and it is still growing at about 20-23%. So then it becomes cheap. So when you look at a 10-year CAGR, you will still get a 20% CAGR. So that is where it will come.
Example which have been often given by veterans on the Wall Street is, अरे भैया HUL को देखो, 1994 से 2000 में भाव कहीं नहीं गया. So why can't a time-wise correction kick in? And which
So
could be multi-year time
1994
correction.
से 2000 अपना per capita income भी उतना नहीं बढ़ा था. So now what I am saying is that what I believe in rather, that the per capita income will increase rapidly, and that is the reason why I am positive on all these companies to deliver higher growth.
Why do you think the per capita will increase?
Anecdotal evidence. It's anecdotal evidence, as I told you earlier, that take any Southeast Asian country and you will see that between 2000 to say 6000, the growth happened very rapidly. In fact, it's a cliche now, which is the demographic dividend as they call it. But during the demographic dividend period, countries can grow in the initial phases, countries can grow sometime in double digit, and that's real growth. Add to that inflation and it becomes very high. So that can happen in India, and I think the only thing is that yes, government needs to put some things in perspective, and they're doing it already. So I think things will change.
Is autos in a good and a sweet spot for an investor? Maybe not for the management right now, but for an investor, because auto stocks have corrected 30, 40, 50%, P multiples have come down. If you're confident of consumer demand coming back, maybe autos will also revive.
So yes, autos will revive, but whether they will deliver the kind of growth they have been delivering earlier, I have my doubts there. So it will definitely revive. I mean, most of them in a short span of time, or let's say couple of years, once the demand revives, they may go back to their original prices. But whether they will be consistent compounders, I have my doubt. I would rather bet on white goods.
The stocks you buy, they rarely change. I mean, you've been buying the same good old stocks from 20 years now. One or two stocks is what you buy and you sell.
Yeah.
When we met last time, you said you were bullish on insurance as a category.
That's correct.
All these insurance stocks have done phenomenally well. I mean, insurance stocks are sitting at an all-time high.
Yeah.
Are you not worried about A, pricing there, and B, concentration?
No, I am not, because I think the opportunity is still massive. take for example, I'll give you an anecdote. I always believe in anecdotal evidence, so pardon me for that. But just the other day, my driver came to me and he said that yesterday I had taken my wife to Juhu. So I asked him, did you take her on a bike? He said, no, I didn't take her on a bike. I said, what happened? So he said that normally I don't take insurance only. Once the bike is, after that, for the first 2 years, after that there is no insurance. But now they have become so strict that I have to take insurance. In fact, when I had met some of the insurance companies, they had the same problem. They said that the insurance is not renewed, but the new laws would change that.
It's compulsory now.
It's compulsory now. So that makes a lot of difference. And the demand can be, because what has happened is that especially in two-wheelers, they are well penetrated. But the insurance, the repeat insurance was not happening. That will start happening now. In addition to that, general insurance still has a huge untapped potential. So I think they will do very well. So no problems there.
If I could just take a leaf from what we understand from the veterans of Wall Street, and the famous investor Warren Buffett, I think he's got publicly and said that, look, I'm not that bullish on auto insurance because auto sales will plummet. Can that be applied in a market like India? We are nowhere close to what is happening in America.
So I think there the growth is 1-2%. Here the growth is significantly higher. So I don't think we can apply it right now. Over a longer period, maybe 15 years down the line, possible. But we have enough growth. 15 years, 20% compounded can be huge.
Okay, what's happened in general insurance is very interesting, that you have government which used to own large part of the market, it's vacating it. We've seen that happen in telecom, we've seen that happen in airline, we've seen that happen again in case of many more industries. In life insurance, that is not the case, because LIC is still the dominant player, and they're still in a commanding place. So I buy an argument of market share gain in general insurance companies. But life insurance, competitive market, and LIC, a government company, dominant player with a better brand.
So I think, there will be companies who will need more branding. It will happen because since, as you said, it's like Colgate, long time back, people used to say, कि मुझे Colgate चाहिए. So it's something like that. हमें LIC करवाना है. हमें LIC करवाना है. So to change that takes time, but that will happen. That will happen. Another thing with LIC is that the principal is guaranteed by Government of India. That is not the case in HDFC or any other private insurer. But I think over a period, these companies are large, these companies are solid companies, and people will start moving to them. So that will happen.
Okay, just a follow up on life insurance. You have two type of companies in life insurance. I'm just trying to break it for the benefit of our viewers here. ULIP dominated franchises and non-ULIP dominated franchises. Which way are you leaning?
I would prefer to non-ULIP.
Okay.
Non-ULIP.
And why is that?
Over a longer period, they will have higher profit margins.
You've liked retailers in the past, whether it's a Titan.
I love that.
You still like retailers. You must be the only one who says, look, I love retail stocks. Why are retail stocks in India doing so well? DMart, look at the commanding premium it has in terms of a market cap. Look at Trent. Aditya Birla Fashion, Aditya Birla Retail, not far away from its 52-week high. India is the only country, only large country where retail stocks are doing well and retail business is doing well, because the world is feeling the heat of Amazon.
So Amazon is a way in which retail will also happen. Most of the current retailers will also go online. Second thing is that before Amazon happened, we had Walmart going up by 5,000 times in the US. So still a long way to go in India, and by that time most of these retailers will also go online. That is one thing. Second is discounting is not the way to go, because otherwise Amazon would not have got into brick and mortar. So I think it will be a mixed model, but they will continue to. The opportunity is massive. I mean, we have not even seen the tip of the iceberg. It's massive.
What is, why do you think Indian retail will not face the heat of an IKEA or other global players when they will start coming to India? Carrefour may come to India. You never know who else could come to India.
Yeah. So the opportunity itself is massive. That's what I'm saying. So we have a market which is growing. I mean, overall retail, I think 3 lakh crores is being added every year. So all the players, existing organized players put together, are not even 30%, 20% of that, of the growth which is there. So it's a huge opportunity. Even if a Walmart comes in or a Carrefour comes in, it's still a long way. Some of them have failed in China. So it's okay. It's not so easy. Indian market is not so easy. I mean, apart from DMart, most of them, especially in grocery, are still seeing the challenges. We had H&M, we have Forever 21 closing down in the US. So ultimately, it's all about how, especially in apparel, you have to see how fashions change. So you have to be up to it. If you are there, then you can continue to be a winner.
What would you not buy in consumption? Where consumption may grow, stock prices may not grow, or consumption which is growing today, the pattern may change.
Correct. So pharma, according to me, is consumption. But as of now, pharma stocks are a bit. They have lots of issues. So as of now, I'm not so bullish on pharma. I'll wait for some time and then take a call on pharma. Other than that, in normal consumption, yes, to some extent, I will be looking at their growth rates. That is very important. Like rural-centric companies, a lot was expected out of them, but they have not been able to deliver. It could be because of leverage. It could be because of a lot of things. So I would rather, as of now, I'm a bit wary of them. I'll see how they deliver, because since the opportunity is very high, even if once they start delivering, I can buy still at a later stage. But as of now, I'll be away from them.
Another way to bet on consumption is that you buy financials.
Yes, I agree.
HDFC Bank, a classic play on Indian retail franchise.
Absolutely, I agree.
What have you shied away from buying finance companies or NBFCs which are retail dominated franchises?
So yes, you can say that NBFC I missed out. I missed out completely. But as far as banks are concerned, yes, we continue to invest in banks. We like banks which are retail centric, and we will continue to buy them.
Markets always tend to look at price to book for financials. You don't track them that way. Why is that?
Opportunity, again, there is a massive opportunity there, and I would rather look at ROAs and ROEs. So over a longer period of time, if a bank says that I'll move my ROEs from say 8% to 18%, if my worksheet says that it can happen, I'll go and buy it.
For consumption to stay vibrant or for consumption to pick up, you need the investment cycle to pick up.
Yes.
Indians have eaten into their savings. Our balance sheet is getting more and more leveraged because Indians on an average had a very less levered balance sheet unlike other developed markets.
Yeah.
Now that investment cycle has not picked up, what will happen to the big thesis?
So let me put it this way, that agreed, we are now more leveraged than what we were earlier, but we are still one of the lowest leveraged. So there is still opportunity. We have a long way to go. Doesn't matter, as per capita income increases, maybe leverage will come down. Most of the leverage as of now has gone up because of real estate. I think over a period that's going to come down.
So some of the stocks where you've invested, which you own, again, you've been owning these stocks from 15, 20 years, so it's public information now.
Yeah, it is.
It is more like public information. Do you think your publicly available portfolio, the Trends and the Batas and the insurance companies of the world, can they give a 15, 18% CAGR return for next 5 years?
I'm quite sure about it. I'm quite sure about it because the opportunity is massive. And in all probability, it will continue to be so at least for next 10, 15 years.
What are you telling your clients who are getting anxious when they read newspaper headlines about consumers slowing down? How are you defending it?
So the only thing is, I say that these headlines today are the same what they were in 2000, 2001. So after that, market went up 6 times in 7 years. So I don't think this time is different. As they say in the markets, this time is never different. It's always the same. So it's economic cycles. So we were at a trough in 2000, 2001. We are at a trough again, and this will come up.
Is there a case for capex stroke industrials and cyclicals to make a comeback, because that's where the push is and that's where the intent is and that's where the policy is headed?
So yes, that will happen, definitely happen, but they won't be the leaders of the bull run. So they will be market performers, some of them will be outperformers also. So like if you go back in history, you will see that most of these consumption stocks were market outperformers. Even in between 2002 to, I mean, leave aside Hindustan Lever, but other than that, these stocks were outperformers. So this time also, some of these infrastructure, or not infrastructure, but some of these cap good stocks will be market performers. So if market goes up 5 times, they will also go up 5, 6 times, but the market will be driven by consumption stocks.
If I had to take you in a time machine and go back to 2000, and say, okay, Mr. Karmarkar, what is one thing you would like to change or two things you would like to change about your investing career? What have been your biggest mistakes where you reflected and you've learned? Which are those?
So let me put it this way, by 2000 probably I had wizened a bit and I did not sell what moved up. So earlier 93 it was a different story. So I held on to my stocks. But yes, of course one is human and one always makes mistake. So when a stock goes up 40 times, one tends to sell. But then when that stock again goes up another 20 times, then you see the regret. So that is what has happened. So I think again one lesson learned is that in all probability, if a growth is likely to continue in a business, then you don't sell that business period.
Irrespective of the valuation.
Irrespective of the valuation. Because over a longer period, the kind of returns which you can get are phenomenal. So just don't sell, because your initial investment is low, and as long as you are in your working career, you keep on getting additional cash flows every year. So don't make the mistake of switching. You should hold on to your stocks, good quality stocks.
How can you be so sure of patterns when we are living in a disruptive world?
So these are not patterns, these are consumer necessities. Let me put it, unless until there is a, let's say there is an invention where one doesn't need footwear, it's a different thing.
Like Patanjali came in. Nobody thought 10 years ago Patanjali would come in.
Also. So these things happen, but what I'm looking at is consumer essentials. I mean, essentials in the sense, yes, someone would agree that jewelry is not an essential. But yes, that is what it has been over history, and probably it will continue to be. Same thing is true with footwear, but clothes, I mean, these are essentials. So I don't think there will be any slowdown as long as India is growing. So in India, there is a less growth and more growth. There is no recession actually. So, and I'm confident for next 20, 30 years, there is going to be no recession in India. And I'm banking on that.
Just to wrap it up, today's interaction, there is one consumer stock or consumer dominated franchise where your thesis has completely gone wrong. You said, look, I did my homework. It was a consumer dominated business. Yet I think I mispriced either the scenario or the promoter or maybe the business or the category.
I didn't misprice it, but I was very early in it, which is hospitals. What has happened in hospitals is I bought them 3 years back and they have gone nowhere. All of them are 40% down. But if you ask me, was I wrong on the business? No, I still believe I was not wrong on the business.
Even after Ayushman and the Cubs which are coming by the government?
Because that will change over a period. The only thing I was wrong was the timing. Timing I was absolutely wrong. But now probably they will start doing well, because most of them have announced that they have stopped their expansion and they are focusing more on increasing occupancy. So I think hospitals will be something which to look at.
I'm going to take all the market conversation away and let's talk about two final questions.
Okay.
One, when do you think the consumer demand in India will come back? Hand over heart, looking at trends and looking at patterns, whether it's autos or FMCG or other categories. When do you think the revival will happen?
I think it will happen somewhere around next financial year. Next financial year should be good according.
So are we in for dark Diwali this time?
It's nothing like a dark Diwali. As I said that, we have come down from say 7% to 5%, but still Diwali is Diwali. So yes, maybe there will be a little bit of less sale, but that's okay. I mean, let's say I'm used to it, so it doesn't matter.
Have markets run ahead of themselves? That's what happens sometimes. They sometimes overshoot up, sometimes they overshoot down.
So in case of consumption, probably what you're saying is yes. They have moved ahead of time. So maybe next 2-3 months will be a good opportunity to invest in them. Because if the sales disappoint like they are likely to in this Q2, you may see some stocks correcting, and that could be an interesting time to look at them.
You migrated from being a sell side specialist to a buy side expert now, from a brokerage firm to a PMS, and now you are taking it to different platforms.
So we are also launching an AIF. Again, both in PMS, like for example in PMS, people who have been with us for last 11 years, 70% of the portfolio is just the same. So we intend to have a buy and hold strategy in AIF also, because we believe in it and we think that India is a place where a buy and hold strategy can give disproportionate returns over a longer period of time.
I look forward to interacting much more of you going forward, and hopefully we should plan biannual interviews, not just annual interviews. So thank you for joining us.
Just one more clarification, that we may have discussed stocks, but none of them is an advice, none of them is a recommendation. It's about the stocks which I hold for a long period of time. It's my thought process. That's what I'm talking about. So please don't take it as an advice. Please don't take it as a recommendation.
Thank you for the disclosure and thank you for joining us.
Thank
That's
you.
it on this edition of Market Makers. Thank you for watching the show and thank you for tuning in.